XRP family. They want you out. What we just witnessed might be one of the most orchestrated, precision-engineered crashes in crypto history. I've been in this market since 2018, and I have seen a lot of manipulation, but nothing quite like this. What just happened wasn't random. It was timed, it was planned, and it was perfectly executed. Right as liquidity dried up, right as futures markets were closing, and right as traders got comfortable thinking the bottom was in. This is not financial advice. Now, listen carefully, because if you were watching the charts when this thing went down, you know exactly what I'm talking about. XRP didn't just dip, it got hammered into the floor. 1 minute, we were sitting near that $3.10 level that's been holding strong for weeks. And the next, it was down to 1.25 on Binance. That's a 53% wipeout in less than an hour. People were getting liquidated left and right. Positions vanished, orders froze, exchanges lagged. And right in the middle of it all, Coinbase futures went offline for maintenance. Conveniently timed, I might add, leaving traders staring at blank screens, wondering if they still even had a position open. I've been through flash crashes before. I've seen panic candles and liquidations, but this one felt different. It wasn't panic-driven. It was strategic. It happened exactly before the Coinbase futures close. That window from 5 to 6 p.m. Eastern, where Bitcoin, Ethereum, Solana, and XRP contracts stopped trading for the week. They crushed XRP right before that close, locking traders out, cleaning the books, and giving institutions a perfect setup to reload at discount levels while retail traders were left shell-shocked. And the timing? Couldn't have been more perfect for the suits. The headlines were filled with talk about tariffs, government shutdown rumors, and global uncertainty. A 100% tariff announcement from President Trump on top of existing ones with China sent the market into chaos. Stocks down, commodities volatile, and crypto conveniently used as the outlet. It was the perfect smokescreen. While everyone was staring at the news cycle, they ran one of the biggest liquidation events we've ever seen. And what happens right after? You guessed it. S1 amendments start rolling in. Spot XRP ETF filings being updated from major players. Bitwise, Franklin Templeton, 21 shares, Wisdom Tree, Grayscale, and Canary Capital. This is the playbook. Wall Street doesn't buy when it's calm. They buy after they've scared the entire retail market out. They let the market bleed. They let the fear set in. And then they come in with their buy walls, sitting quietly below support, scooping up millions of tokens from panicked traders who just got forced out of their margin positions. This is how the suits play. Retail buys the dip emotionally. Wall Street manufactures the dip strategically. And here's where it gets even more interesting. Canary Capital just locked in its ticker for the upcoming XRP ETF, XRPC. Think about that. They're literally preparing tickers and updates as the price gets crushed. You think that's coincidence? No. They are lining everything up behind the scenes, S1 filings, ticker approvals, custodian partnerships, all ready to go live the moment the government shutdown ends and the SEC starts approving new ETFs. That's the real game being played. And that's exactly why I put together something that every XRP investor needs to see. The XRP Millionaire Blueprint. Inside, you'll get a complete breakdown of how these institutional setups work, what documents and filings to actually track, the visual timeline of the ETF process, and how the coming utility phase could play out once regulatory clarity is finalized. There's even a full infographic and video walkthrough that connects all the moving pieces, the banks, the partnerships, and the timeline that could lead to a global liquidity reset. You can get it in the pinned comment below this video. Now back to what just happened, because this event isn't just about price, it's about positioning. What we're witnessing is the transition of XRP from being treated like a retail speculation asset to an institutional-grade liquidity tool. When you have filings like this coming from multiple heavy hitters simultaneously, it's not random. These are coordinated rollouts that take months of preparation, and they always come right after heavy price suppression. It's a rinse and repeat cycle. First, they build hype through selective media coverage. Then, They create a sharp drawdown to reset the leverage and flush liquidity. And finally, they move in with filings, tickers, and press releases. All while price sits at freshly discounted levels. That's the playbook. And every time it happens, retail gets shaken out while institutional players accumulate. Now, I know a lot of people out there are hurting. Some got liquidated. Some are just stunned watching the price action. But remember this. The ones who make it in crypto aren't the ones who panic during red candles. They're the ones who understand the setup. XRP didn't get destroyed today. It got cleansed. It's the oldest trick in the book. Drive the weak hands out before the next leg up. And while that's happening, look at the behavior of the big players. Grayscale updating filings. Franklin Templeton increasing XRP exposure in its digital asset portfolios. And Canary, of course, finalizing ticker designations. All of this activity during a supposed meltdown? That's not coincidence. That's accumulation. The suits are moving. The filings are active. The tickers are being locked in. And while most people are crying scam or manipulation, the real game is being played in the boardrooms, not on the exchanges. For the average retail investor, that means one thing. Don't get shaken out of your strategy. The volatility is the noise. The filings, the partnerships, and the utility are the signal. And if you've been here since before the lawsuit, before the relistings, before the ETF speculation, then you already know. Every major shakeout in XRP's history has been followed by an even stronger rally. Now, here's where this gets wild. The liquidation count from this crash, when it's fully tallied, could be historic. Billions wiped in hours, exchanges overloaded, futures data delayed. But all of this resets open interest, which clears the path for the next leg. That's how every true bull cycle starts, with forced liquidation followed by renewed accumulation. So yes, the suits may have flushed everyone down to that 1.25 mark, but look what happened right after. XRP bounced immediately back toward the 2.20, 2.30 range, rebuilding a new floor within just an hour. That's not retail doing that. That's capital stepping in hard at those levels. The speed of that recovery shows you exactly where the accumulation zones are being defended. And while people panic about red candles, I see something different, a setup. The consolidation that follows events like this is where market direction truly shifts. Historically, after major flushouts, XRP's next impulsive move tends to break the previous local highs. That's what I'm watching now. The big picture hasn't changed. The fundamentals haven't changed. The filings, the liquidity corridors, the institutional rails, they're all expanding. The only thing that changed was price. And for those who understand what's really happening behind the scenes, that's not a problem. That's an opportunity. Because every crash like this is just a transfer. A transfer of wealth, a transfer of tokens, and a transfer of control. From emotional hands to strategic ones. And that's why we stay grounded. That's why we stay focused. Because what's coming next could rewrite the playbook for this entire market. Now, here's where things really start to accelerate. Because what happens after an engineered flush like this is what separates those who survive from those who thrive. The liquidation event we just saw wasn't just a random blip. It was a structural reset. You can feel it when you look across the entire crypto landscape, from Bitcoin to Ethereum to XRP. The entire derivatives market just got leveled out. When open interest gets crushed like that, when leverage is destroyed, what follows is the rebuilding phase. And that's exactly where smart money moves in. They don't FOMO at the top. They quietly accumulate at the bottom when the charts look broken, when sentiment is at its worst, and when retail has sworn off crypto altogether. This is the phase that builds millionaires. Look closely and you'll see the pattern. After every major XRP wipeout, what comes next is not another slow bleed. It's a tightening coil, a build-up of energy, and then an explosive move. It happened after the 2020 lawsuit crash. It happened again after the 2021 market correction. And now it's repeating once more. That's not coincidence. That's a cycle. And the suits know it. When the price dropped from $3.10 to $1.25, it wasn't panic selling, it was strategic liquidation. You can see it in the volume profile. Massive spikes of forced selling, followed by immediate buying pressure within minutes. That kind of V-shaped recovery doesn't come from retail buyers with a few $100s. That comes from institutions with deep liquidity and algorithmic precision. And what's the timing? ETF amendments, government shutdown chatter, and global uncertainty. Every single headline was perfectly aligned to justify volatility. But behind the noise, the filings continued. Canary Capital, Wisdom Tree, Franklin Templeton, all submitting, revising, preparing. The infrastructure was being laid out quietly while the market screamed chaos. Now let's break down why that's significant. The ETF approval process isn't just about a green light from the SEC. It's about building liquidity depth. When you see S1 amendments roll in during a crash, that's not a sign of hesitation. It's a signal that they're aligning pricing models with new market conditions. Lower entry prices mean better valuation metrics for fund launches. So, when the ETFs eventually go live, their cost bases are significantly improved. That's how they play the game. They use this event to reset the entire risk curve across crypto. Because once open interest resets and margin traders are gone, volatility naturally cools. Then institutions can step in with spot positions. Real buying, not synthetic leverage. That's the foundation of the next leg up. Look at the timing again. Retail panics out. Prices dump. Liquidations wipe the board clean. Volatility spikes. Institutions accumulate quietly. Volume stabilizes. ETF filings progress. Narrative shifts. New liquidity enters. Market breaks previous highs. It's the same rhythm every cycle. But this time, it's happening with XRP right as it's transitioning from speculation to utility. And that's the key, utility. Because while people are screaming about price, what's actually happening under the surface is the establishment of a liquidity infrastructure that the traditional banking system can use. RippleNet corridors are expanding. On-demand liquidity, ODL, continues scaling in regions like LATAM and the Middle East. And those transactions aren't based on hype, they're based on necessity. The global payment system is outdated. Everyone knows it. And the timing of this shift couldn't be more clear. SWIFT is running pilots with digital asset interoperability. Visa and MasterCard are building out cross-border stablecoin settlement layers. And meanwhile, the Ripple ecosystem is quietly positioning XRP as the neutral bridge asset, the only one with proven scalability, liquidity, and existing real-world adoption. Now, combine that with what just happened. Prices get crushed, leverage wiped out, and accumulation zones established right before ETFs are finalized. What does that sound like to you? It's the calm before the storm. This isn't some random coincidence. This is systemic preparation for the next phase of digital finance. And while everyone's focused on the short-term volatility, here's what's really happening in the background. Central banks are moving closer to interoperability between CBDCs. ISO 2022 integration is expanding, connecting financial messaging with tokenized value. Liquidity hubs like Ripple's ODL are being built into the architecture that will support that. And ETF products are being structured to provide institutions a safe, regulated way to gain exposure. That's the full stack. That's what's forming right now beneath the chaos. So when you see a 50% price crash, understand what that really means. A reset. A positioning shift. The old leverage-driven market is getting cleared out so that real liquidity can enter. This is where things start to get powerful, because the setup we have right now for XRP isn't just technical, it's macro. We're talking about one of the most asymmetric setups in the entire digital asset space. Consider this. While XRP is stabilizing around the $2.20 zone, Bitcoin is consolidating near new highs, and Ethereum is getting ETF inflows. Historically, XRP follows these cycles but lags slightly, and when it catches up, it tends to move fast. This structure mirrors the early stages of previous bull runs where Bitcoin first breaks out, Ethereum confirms, and XRP follows with explosive utility-driven momentum. And let's not forget, XRP hasn't even had its full speculative wave post-lawsuit yet. The relistings were a spark, but not the full ignition. Once ETF approval happens, and once large payment corridors start routing higher volumes, you're looking at an entirely different asset profile. That's the transition from crypto token to liquidity breach. Now think about what we just saw with the liquidation cascade. That event didn't destroy confidence. It cleared the path. It took out the leveraged noise, leaving only those truly holding. When that happens, volatility compresses. And when volatility compresses after a liquidation event, that's when markets tend to reverse hard. The data already shows it. Order books refilling at key zones, open interest rebuilding slowly but responsibly, and funding rates normalizing. That's healthy market structure. That's what you want to see before an institutional rally. And it's not just about XRP. Look at the ripple effects. No pun intended. Bitcoin futures volume dropped dramatically post-crash, showing risk-off behavior. Ethereum stabilized quickly, with minimal long liquidations compared to other assets. That suggests controlled conditions, not chaos. It's as if someone turned the switch off on leverage and said, "Now, let's start fresh." Meanwhile, XRP's bounce from $1.25 back to $2.30 happened faster than almost any other top 10 coin. That kind of velocity tells you something big. Demand is sitting right under the surface. That's accumulation, not speculation. You can see it even clearer when you zoom out on the weekly chart. Each major flush in XRP's history forms a higher low structurally. Despite the temporary chaos, the broader trend keeps tightening upward, and every one of these corrections has been followed by exponential breakouts. This is how markets mature. The weak hands get wiped out, the infrastructure players move in, and right now, the infrastructure is institutional. Now let's talk about the psychology behind all this. The average investor looks at a 50% crash and sees danger. But smart money sees liquidity. Every stop-loss hit, every forced liquidation, every panic sale, that's liquidity being transferred. They don't care about the headlines. They care about the setup. They've seen this story before, and they know how it ends. The emotional traders are gone. The ones who remain are the disciplined. And that's when markets start to behave differently. That's when you stop seeing random spikes and start seeing structured accumulation ranges. Those sideways periods that drive retail crazy, but tell insiders that positioning is underway. And then, suddenly, a catalyst hits. Sometimes it's an ETF approval. Sometimes it's a payment integration. Sometimes it's just liquidity flipping to the upside. But when it happens, it catches everyone off guard, except the ones who understood the setup. That's what we're in right now. This is not the end of XRP's story. This is the setup before the next chapter. Look at the alignment of events. ETF filings active. Lawsuit concluded. Liquidity corridors expanding. Partnerships rolling out. Volatility reset. Everything is aligning for the next phase. And the most important thing? The community is still here. Despite everything, the crashes, the delays, the manipulation, the XRP community remains one of the strongest in crypto. That resilience matters, because price action follows conviction. Retail may not have institutional liquidity, but they have staying power. And that's what builds the foundation of every major run. Now, there's another layer to all of this that most people overlook. The macroeconomic backdrop. Inflation data, interest rate policies, and currency volatility are all converging to create the perfect storm for alternative liquidity systems. Central banks are diversifying reserves, nations are experimenting with digital currencies, and corporations are exploring blockchain settlements. That's not hype. That's the evolution of finance. And XRP, being designed for settlement efficiency, stands right at the intersection of that transformation. That's why these events, the volatility, the ETF filings, the institutional movements, matter so much right now. Because they are not isolated. They're synchronized. When the dust settles from this crash, what remains will be a cleaner, leaner, and far more liquid XRP market. The forced liquidations are already absorbed. The order books are resetting. And now, the stage is being set for a fundamental repricing event once the next wave of news hits. So, if you're watching this market and wondering whether this was the end or the beginning, history tells us clearly, this is the setup phase. Every great run starts with capitulation. Every breakout starts with disbelief. We've seen this play out before, and we'll see it again. But this time, it's different, because the world is watching. The institutions are ready. The filings are live. The rails are built. And XRP, once again, stands at the center of it all. Now here's the truth. What comes next will catch most of the market completely off guard. Because right now, while retail traders are still recovering from that liquidation shock, the bigger players are already setting up for the next major phase. You can feel it in the tone shift, not fear, but preparation. Not panic, but patience. We're in what professionals call the stealth phase. It's the calm that follows chaos. The time when insiders quietly reposition before the next leg begins. And XRP's setup right now fits that description perfectly. After a 50% drawdown, most assets take weeks to find stability. XRP did it in hours. That's not random. That's deep liquidity returning to the market, paired with new capital preparing for what's next. The ETF amendments weren't a coincidence. They were a signal. Institutions are laying down infrastructure while everyone else is licking their wounds. They're waiting for regulatory doors to open, and when that happens, it won't be gradual. It'll be instant. Because these filings, these partnerships, these liquidity rails, they're already built. They're just waiting for the green light. That's how Wall Street plays. They build first, suppress sentiment, and then launch when no one expects it. And when that trigger hits, retail rushes back in. But by then, the best entries are gone. We've seen this same story with Bitcoin ETFs. We saw it with Ethereum ETF approvals. And we're watching it form again with XRP. Except this time, the setup is bigger. XRP's use case isn't just store of value speculation, it's actual movement of global liquidity. We're talking settlement rails for banking, remittances, and cross-border transfers. All industries that touch trillions of dollars every single day. And while traders chase volatility, institutions are chasing yield. That's why they're so focused on XRP right now. Because once ETFs go live, they can park serious capital in a regulated wrapper, access liquidity safely, and let the underlying utility do the heavy lifting. Now zoom out. Look at what's happening globally. Nations are exploring digital settlement. Financial systems are modernizing. Even SWIFT is experimenting with tokenized value transfers. This is the convergence we've been waiting for. Traditional finance colliding with blockchain liquidity. XRP isn't fighting the system anymore. It's quietly integrating into it. That's why these shakeouts don't scare the real holders. They understand the macro picture. They know that volatility is just noise when adoption is accelerating beneath the surface. So, while others count red candles, the ones who get it are looking at infrastructure. Ripple expanding corridors in Europe and the Middle East. Central banks testing cross-asset settlement with tokenized reserves. Corporate treasuries experimenting with instant settlement rails. All of that funnels into one outcome. Demand for efficient, neutral liquidity assets. XRP fits that bill better than anything else. Now, let's talk about the psychology that drives the next wave. When the fear fades and charts start to rebuild, disbelief kicks in. Traders assume it's a dead cat bounce, sentiment stays skeptical, and volume builds quietly. That's how every major breakout begins, in silence. Then, something flips. A regulatory announcement, an ETF approval, a new corridor activation, and suddenly, the same asset everyone abandoned becomes the headline again. Prices don't climb gradually. They reprice. The market realizes it's behind, and momentum accelerates. That's the inflection point, and that's what's forming right now. But here's the key takeaway. This isn't about hype, it's about positioning. The market has just been reset. Leverage is gone. fear is high. And that's exactly when major reversals happen. XRP's resilience after this crash shows that confidence hasn't died. It's consolidating. Every flash crash in XRP's history has paved the way for its next exponential move. So, while the noise continues, remember, fundamentals always win over time. And XRP's fundamentals are stronger than ever. Regulatory clarity is here. Institutional demand is forming. The ecosystem is expanding. And the narrative is shifting from lawsuit token to global settlement layer. That's why this moment matters. It's not the end of a run, it's the beginning of a real one. Because for the first time in years, XRP's technicals, fundamentals, and macro environment are aligned. So, hold your head high, XRP family. This is where patience pays. Because every time the market tries to shake you out, it's only setting the stage for the next move up. The liquidation storm may have taken many off guard. But for those who understand the bigger picture, it was the cleansing before liftoff. XRP's next chapter isn't built on speculation. It's built on adoption, infrastructure, and scale. And when the next green candle begins, those who stayed focused will already be in position. Because history doesn't reward fear, it rewards conviction. And in markets like this, conviction is everything. Now, if you want the full breakdown of how this all connects, from the ETF filings to the liquidity map to the global payment corridors that are quietly going live, I've laid it all out in the XRP Millionaire Blueprint. It includes the complete document, infographic, and a step-by-step video showing how the institutions are setting up behind the scenes and where the next phase could begin. You'll find the XRP Millionaire Blueprint in the pinned comment below this video.